It feels like every day there's another specter of tariffs. There's a little bit of belligerence coming from the U.S. And yet the market seems positive that the U.S. and China will find a way through this. Are they wrong?
I don't know. I think,
who knows? Apart from President Trump.
Yeah, that's right. That's right. I think the market, as you said, the market has a view that there will be an extension, as you said, or a deal along the way, and that's probably right in some minor way. My view is that, and I think it came out of the Munich Security Conference very clearly also, the Americans don't believe in multilateralism anymore, and so we are moving constantly towards a less good scenario, and global trade is suffering. Right?
Okay, but is it true that they don't believe in it, or do they just not say they believe in it to get votes? Because if you look at NAFTA, the NAFTA 2.0 was very similar to the agreement we had initially.
I heard a trade specialist call it NAFTA 0.7, right? And it's because it's a little bit less good, right? No, they will try to strike bilateral deals, and we don't know what character that would have. But it's a long process, and it's disruptive along the way. But then Trump is a TV reality show, right? He sort of builds up expectations, take it back, and and that's the uncertainty that now is hitting sentiment, unfortunately.
And so is that actually, will it hit, a proper GDP because of sentiment?
I think it has already. I think it has.
Where? U.S., China, Europe?
Well, it has hit specifically in Europe and in China and Asia. We saw the numbers out of Singapore also, right? So it hurts two things. It hurts trade, and it hurts sentiment, and that's investment. And investment is much more trade intensive than consumer goods, right? So you have that sort of two-pillar slowdown, and potentially very dramatically. So I mean, when you see the early indicators of global trade, it's maybe zero now. I mean, it is really coming down significantly, and I think predominant, I can actually think of no other reason than this noise out of Washington.
Okay, but do you see it engendering a recession or a significant slowdown? And is that just because of fundamentals, end of cycle, and end of, for example, tax cuts, or is it something to do with these trade concerns?
I think so recession. I mean, hopefully not global recession, but it is. It's threatening in Europe. I mean, technically we are very close now, and there were a few technical things that sort of temporary things, but the underlying picture we see in business indicators, they're coming down very rapidly, and they come off the export numbers, right? So you see the export numbers come down, you see the sentiment towards export demand coming down. It's not the domestic side so much.
Where do you see Europe in all of this? So I'm trying to find actually a headline that we had on Angela Merkel's, said to be ruffled by what she's hearing from the U.S. at the prospect of more hard decisions by President Trump. I don't know what ruffled means on an economic term.
Well, I don't know either. I mean, she had this great line that she was slightly shocked by hearing that German cars are potentially a security threat to America, and in her normal understated ways. I mean, no, I think it's very clear in Berlin and throughout Europe, the Western Europe at least, the political class, the governments are absolutely in shock over what America is doing. I mean, people are struggling to understand why and how to react, I think. And then there is the other side of it, which is the business side. Life goes on. You hear noise on the political side. But what we hear, certainly from our corporate clients around Europe, is a lot of nervousness now. Also a lot of nervousness, and particularly on the export orders into Asia.
But is it Europe that will take the brunt? Because it's almost like, the third party in these tough talks.
Yeah. I think certainly so far, but there are certainly indicators, I think, that China is taking a big hit also. But they smoothed their data, so we don't quite see that dramatically in China, right? But if you look at the import numbers, they came down, 9% or something, which is a very dramatic. We see very poor numbers.
But is that sentiment in China, or is it something more? Again, we're seeing a slowdown, but it's not the slowdown that we saw in 2016, where PBOC actually went quite heavy. Yeah,
I wish I knew, but what I have heard from a number of corporate clients is that the Chinese now, the exporters into China now require upfront payments. And the reason for this apparently is that the capital controls de facto being put in place makes it harder to transfer the money, so you want the money out for. So that's probably a temporary, very significant decline in trade that then sort of bounces back a little bit. But it's a sign of something quite problematic.